is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And tonight, we are going to dive into the action on Bitcoin and answer 3 big nagging questions. All right, so the market is looking like it's turning down. We have a downtrend that's going on, but where do we go from here? What is going to happen next? That's the first question. We're going to talk about that in the short term. The second question is, have we already hit the market cycle peak? Is this it? Is it over? Is the bull run done? Well, I'm going to answer that question. And if this is not the end, what's the deal with all the different predictions about the market cycle peak supposedly being in August or September, or is it October? Some people are even saying early 2026. We even had folks out there stating that the market cycle peak was going to happen in July. Now, of course, you know, just looking up at the chart right now, that the people who were saying July, well, they were dead wrong, because the August peak created a new all-time high for Bitcoin. Okay, so before we start into this, let me make sure that you understand that this is not financial advice. Anything I say in this video could cause you to lose a catastrophic amount of money, and you could end up a homeless bum living in the alleyway inside of a cardboard box. All right, so keep that in mind. I'm just telling you what my thoughts are about this market. And again, we're going to cover all of the yip yap that we're hearing from the YouTube big mouths about when the market cycle peak is. So let's get into question number 1. So we got this downtrend happening after we hit that all-time peak, and then we're starting to slump down. And this does look like a downtrend. We have somewhat of a little channel with the action bouncing up and down, okay? And we broke a critical level right there at 110,000 for Bitcoin. So what is going to happen next? Well, I can tell you there's a couple clues that are on this chart. While we're in this downtrend, it seems that the stochastic peak that occurred here returned this nice price. The next stochastic peak returned the all-time high. But notice that the previous stochastic peak was up here in the overbought zone above the 80 line, just like this one was. But the current stochastic peak, look at this, it rolled over before it made it up to the 80 line. So when price goes higher than the previous, but the stochastic peak is lower than the previous, that's a bearish divergence. Okay, so once we got to the bottom, it looked like this fast line, the blue line, was going to curl up and cross over the orange line or the slow line and start to move up for another cycle. That didn't happen. Notice how the fast line, the blue line, right there, it unfurled. So while it looked like it was going to curl up and cross over, it let loose and it slumped back down. Okay, so that means that we are still in this bear slump on the one-day chart, and we're headed towards 2 obvious nodes on the VPVR, which this is where there's a lot of bot trading, institutional trading, okay? The big, massive institutional buyers that are professional traders that are using bots, computer programs, to let them know where there are predetermined selling points and buying points. So here's a big node right there, and we're at that current node. And now that we see the blue line falling off of the orange line, we're probably going to head for this next node. So in the short term, you can look for a possible price. Don't be surprised if we don't fall down to 104K. Now, the 104,000 level magically coincides with this rising blue line right there. See this blue line coming along here, rising up? Well, that's the 200 EMA, 200 exponential moving average. And it is going to be a critical support level. So once price checks down to the 200 EMA at this big volume node, one of two things happens. We're either going to bounce up from there and come back to this big node, or we're going to capitulate and we're going to test the next further level down, which will probably blow through this blue dash line and come on down to the next volume node. And the next node just happens to be at 96K. Yes, that is possible. That's just what we can see on the 1 day chart. All right, now let me clear this out. And then we're going to talk about this whole nonsense about these market cycle peaks and why everyone gets it wrong. And then we're going to look at the chart, and I'm going to show you something that not a lot of people talk about. And you tell me in the comments if this is not plain and simple, as plain as the nose on your face. So I'm going to crank this thing up to the 1 week chart. We're going to have a look at what's going on here. What do we see here? What do you notice on this chart that sticks out like a sore thumb? Well, there's two things that should stick out. And thing number one, if you guessed a bearish crossover of the stochastic, you guessed right. And if you also caught the bearish crossover of the oscillators on the MACD, you guessed right again. And then you notice that we're printing red bars on the MACD histogram. So what happens, the way I look at this is when you have this bearish cross right here, sometimes it can jump back up and stay up there. I mean, look at this. Here's a bearish cross here. You see that? Blue line crosses over the orange, but then what does it do? It comes back up for another hump. I call that the 2-hump camel. And then it finally crosses over and goes down. So we have a cross here, but it's confirmed by a cross on the MACD. So you notice on this one where we had this bearish cross here, when you look downstairs, the blue line never did confirm and cross over on the MACD. It curled up and went up for another run. Here we have a definite confirmed crossover on both because the oscillators on the MACD lag the stochastic oscillators. So that's clue number one. Well, actually 1, 2, and 3. Now, according to this chart, we're going to have to consider the possibility of a full stochastic cycle down. What do I mean by that? That means that if this blue line comes all the way dipping down towards the 20 before it turns and goes all the way back up for another hump, well, we could be in for a nice dip. And looking upstairs, if we dip all the way down like this, we're probably going to hit the bottom of this support and resistance zone box that I have drawn out here. And the bottom of that box is 92K. Now, we don't know if that's going to happen, but there's talk that it's going to happen because apparently there is a CME gap, all right, where the CME, the futures, over one weekend, whenever Bitcoin was way back here, I think it was sometime in, April, February. No, not April, February. It's back here in November. That over the weekend, Bitcoin shot up throughout the weekend while the stock market was closed. And that produced a gap on the CME chart because on the CME futures, there's no trading on the weekend. So what happens is this. Let me draw it for you. I'll just draw some bars. Let's just imagine that here's a Friday and you get a candle like this. And instead of the Saturday and Sunday where Bitcoin is still trading and it's making a candle like this and a candle like that, well, there's no trading on the CME because that's the stock market. So boop, boop, those are gone. And then Monday morning at 8 a.m., the bell rings and the market opens up and then the CME chart prints its next candle and it's like that. So what do you have? You've got a gap from here to here. That is what the CME gap is. They say that when you get a gap like that, the Bitcoin price usually will come back and retest that area and fill and actually have trading in that area that quote unquote fills the gap. Okay? So up until now, we have no trading of the CME that covered this gap right here. All right? There's our CME gap. If I can make a bracket right there, that's the gap. Okay, so there's your possibility at 92K. Now let's talk about market cycle peaks and whether or not the bull run is done. Now, somebody could make a case that this was the market cycle peak and then we're going to go down from here. I don't believe that. And for this to have been the market cycle peak, we would have to say that for the first time in crypto's history that the bull market got shorter, or actually the complete cycle from capitulation of the last bull market peak to this bull market, that the cycle has gotten shorter. And I don't think that's going to happen. When you count months, years and months from one peak cycle to the next, it's somewhere around what, 4 years and a few months, a little bit more than 4. So it actually moves on the calendar, okay, where one peak might be October, then the next cycle it pushes up to December, the next cycle it pushes up to March or April, okay? So when we look at the peaks, well, unless Bitcoin is starting something new, we cannot call this the market cycle peak because not enough time has elapsed. Now, like I was saying before, you had some big mouths out there that were claiming that the month of August was the bull market peak, and that did not happen because in August, we closed somewhere around, 117, 118, and then we had the all-time high of 124K. So that just wiped out that whole theory. Now, we've had other people that claim, actually, did I say August? I meant to say July. So they said that July was going to be the peak, all right? And then August, we ran on up and we had this all-time high. Sorry about that. So the theory that July was going to be it, that's out the window. Then we have people that are saying that August is it. I don't believe in that one. Could it happen? Sure. Do I believe it? No, because we haven't had enough time in this cycle. So when do I think that we're going to hit a peak? Well, I'll show you, and then I'm going to show you 2 scenarios of what could play out from here based on what this stochastic is going to do. So for determining where this peak is going to be, I'm going to just ramp this on up, and we're going to look at the 1-month chart, get some more data in here. Let's scrunch this down a little bit. So now we can see what happened since the last bull market peak, and then we're going to compare what's happening right now. Okay, so way back here in November of 2021, that was our bull market peak. So we're going to push ahead and we take a whole cycle forward, and when you add the 4 years and a few months, it should put us out here at least to November. Okay, some are saying October. I don't believe in that. I'm thinking November or first quarter 2026. And here's why. Now, when we had this first peak right here in April of 2021, we had a 55% drop, and then the market went up again for that second peak. And during that second peak, the stochastic had another hump up. You can't see it on this 1-month chart, but the second hump was lower than the first hump, and that was the bearish divergence. And then the market capitulated. So everyone thought it was over because we had this 55% drop, and it was not over. So here, if we dropped from where we are right now down to fill that gap, let's just put it on here. If we went from the peak price there and we come all the way down to that CME gap, well, that's only 25%. That's less than half of the drop that we experienced back here whenever the market went all the way down. Let's see, where is that bottom point? Somewhere in here. Well, that says 35%. Maybe it wasn't 55. So 35%. Well, at any rate, dropping from 124 down to 92 is still not as big of the dip that we had during the last pre-market cycle peak that led to the new all-time high when we hit, 69K. All right, so let's just look at the stochastic here. We had this big run up. It came down, it humped up a little bit more, and then it fell off. Now notice that we have this big run up here. We had a bearish crossover, and then it came up for some more air, and now there's another crossover. But I'm thinking this is going to go up for one more run, and that's where we're going to experience the bull market peak. Because notice on the MACD oscillators, After this first run up, the lagging oscillator never crossed over the orange line. On the next run up, we touched here, but the MACD oscillator, the lagging oscillators, never touched on the orange line. Now here we are on the third run up. We had a crossover here on the stochastic, but look at the gap between the fast line and the slow line on the lagging MACD oscillator. So what I think is going to happen is this. I'm going to have to back this off back to the 1 week chart so I can draw this out for you. Here is my prediction. There's one of two things that's going to happen. Here is prediction scenario number 1. We get a cycle down here, and then we're going to come up for the bull market peak where we get a full cycle. And then the peak, once we peak out, we're going to be pushed up into December or January or even possibly February of 2026. When you measure the distance between the peaks, this peak to this peak, you're looking at how many months? Let's see. This was, it's underneath my picture. From here to here, several months, about 6 months. From this peak crossover, that was January of 2025, to this peak in a crossover, that's August of 2025. That's 6 months. So if we get a full cycle, add 6 months to where we are right now, September, October, November, December, January, February. We could be January or February before the bull market peak. And there are a lot of people who are saying that that's what they think the peak is going to be. I tend to agree. Now, let's give you scenario number 2. Here's what the second scenario is going to be, that we don't get a full cycle down. We're going to dip down and we're going to come up for another hump. And that hump is going to happen in Q4 of 2024. And that could be anywhere from October to November or early December. So that's a possibility too. I'm thinking we're going to push to Q1, but I'm prepared to play this market. I'm hoping it takes as long as it can because I'm going to be swing trading the whole way, right? Those of you who are in my private group, you know how it goes in the private group. We're swing trading this sucker all the way, and we're waiting for some massive gains. And the longer this market stretches out, the better for us. If you want to find out information about how to be in the private group, you can check the link in the description. No beginners, and I cannot allow anyone that does not have the ability to afford to invest. Another thing, we are going to have my cousin coming into the group who is a certified financial planner, and he can give financial advice. So he will be joining us and helping to advise people in the group. Well, anyway, that is my prediction. What are your thoughts? I want you to post in the comments below. Do you think this whole cycle is done? Did we just see the peak? Or do you think we're going to have a deep correction and fill the CME gap at 92K and then plow on from there? And after we fill the gap or not, do you think the market is going to peak out in October/November? Or do you think it will be December/January or February/March? Cast your vote. I want to know what you think. That's all I got for this one. This is Carlton, and I am out.